What if I told you that £200 a month could eventually pay your bills? Not through some get-rich-quick scheme. Not with crypto, not with day trading. Just boring, patient buy-and-hold investing into companies that pay you real cash every single year. That is exactly what I am going to do. Starting from zero, and you are going to watch every single step of it. Quick one before we go any further. This is not investment advice. I am not a financial advisor. I am just an ordinary person documenting my own investing journey. Please do your own research before putting any money into the stock market. Here is the plan. Every single month, £200 goes into UK dividend-paying stocks inside a stocks and shares ISA. That means every penny of growth and every penny of dividends is completely tax-free. I am not picking the flashiest companies. I am picking reliable ones. Companies that have been paying dividends for years and growing those dividends over time. The idea is simple. Buy shares, receive dividends, reinvest those dividends to buy more shares, which pay more dividends, which buy more shares. It is a snowball, and every month it gets a little bit bigger. Right now, the snowball is barely a handful of snow, but month after month, year after year, it picks up speed. If I keep this going for 10 years, 20 years, the numbers start to get genuinely exciting. But we will get to that. For now, let us focus on month 1. The timing here is not an accident. The new tax year has just started on the 6th of April, which means I have a fresh £20,000 ISA allowance. Now, I am nowhere near using all of that with £200 a month. But starting at the beginning of the tax year means every single penny of this journey is sheltered from tax from day one. If you have been thinking about starting your own investing journey, honestly, this is the best time to begin. The allowance resets every April. Use it or lose it. I am using Trading 212 for my ISA. It is free to use, there are no trading fees, and they are currently offering a free fractional share worth up to £100 when you sign up and deposit at least £1. I will leave my referral link in the description below. Full transparency, I do get a small bonus if you use it. But it is the platform I genuinely use for this entire journey. You will see it in every screenshot. Right. Let us get into the actual investments. My first purchase is Legal & General, ticker LGen on the London Stock Exchange. Legal & General is one of the UK's largest financial services companies. It manages pension funds for millions of people, provides life insurance, and invests in long-term assets, including clean energy and housing. It is not exciting. It is not trendy. But it has been around since 1836, and it is absolutely massive. Now, here is the number that caught my eye. The dividend yield is 8.5%. 8.5%. To put that in context, a savings account right now might give you 4 or 5%. Legal & General is offering nearly double that, paid directly to shareholders. But I want to be honest about the risks, because an 8.5% yield should make you ask questions. The dividend cover ratio is quite low, which means the company is currently paying out more in dividends than it earns in profit. That is not sustainable forever. However, Legal & General has grown its dividend in 14 of the last 15 years. The only blip was during the pandemic, and they bounced straight back. I have put £120 into Legal & General this month. That is my biggest single position. I believe in this company for the long term, but I am watching that dividend cover closely. And I will be doing a full deep dive on LGen in a separate video very soon if you want the full picture. My second purchase is Aviva, ticker AV on the London Stock Exchange. Aviva is another insurance giant. Life insurance, pensions, general insurance. If you have ever had car insurance or home insurance in the UK, there is a decent chance Aviva was involved somewhere along the line. The share price sits at around 595 pence, and the dividend yield is roughly 6.5%. Lower than Legal & General, but still excellent. And here is what I really like about Aviva. The dividend growth over the last 3 years has averaged 30% per year. That is not a typo. 30% average growth. They have been aggressively increasing their payouts to shareholders. Aviva has been paying dividends for 25 years. It is well established, and the payout feels more sustainable than Legal & General's. Think of it as the steady one sitting next to LGN's higher risk, higher reward profile. Two companies in a similar space, but with different risk characteristics. That balance is deliberate. I have put £80 into Aviva this month, so here is where we stand after month 1. Total invested, £200, £120 in Legal and General, £80 in Aviva. Dividends received so far, 0. But that will change. LGEN goes ex-dividend on the 23rd of April, which means my first dividend payment should come through in early June. I cannot wait for that one. Expected annual dividend income based on current yields, roughly £16. Now, I know, £16 is not life-changing. It barely covers a meal out. But this is month 1. Next month, another 200 goes in. And the month after that, another 200. And each time that expected income number ticks upward. And once those dividends start arriving and getting reinvested, the snowball picks up real momentum. The snowball has started rolling, and so the journey begins. That is month 1 done. The portfolio is tiny, but the journey has officially started. If you want to follow along from the very beginning, hit subscribe. Next month, there will be another £200 going in, and with a bit of luck, my very first dividend payment will land. I am genuinely excited to see how this grows. Now I want to hear from you. If you had £200 to put into dividend stocks right now, what would you pick? Drop it in the comments. I am reading every single one. Until next time, happy investing.